This was the live stream that we had in the morning. Here we are trying to analyze gold. We started on the monthly time frame, and we were saying that, as you see, we are marking the support and resistance level, and that line that I marked with the dotted line, it was trying to show you the support area. So the other one that is think there, it was drawn there basically to show you guys where we had the liquidity sweep on the monthly time frame. So the direction that I was putting there, that one was trying to show you that we had a pattern of a triple top on a monthly time frame, indicating a strong sell downwards. You understand the point? So there I was trying to rectify something whereby I was saying that the market at that level, it had to sweep some liquidity, and some sellers thought that the market had changed after breaking or giving us a breakout through the support area. So there, people were giving me some questions. Now, so when I came back and continued with our analysis. So from there, like I've told you earlier, guys, we are trying to mark out the continuation pattern of a triple tops, and according to our expectations, we saw that the market would give us strong sells to at least the support area, for us to either get more buys from that level or to continue downwards after breaking again the support area, according to the diagram that we are saying there. So from there, I show you what we could expect. We either go upwards or we go downwards, according to what you see. Yeah. Then at the moment, I had to go downwards to show you a clear view or a clear image. Most of the time, those of you that are trading SMC and ICT, this is where I had to talk about liquidity sweeps and the two types of liquidity that we have. Remember, we are still on a monthly time frame. I don't know whether you remember that. So at that moment, like I told you earlier, I showed you you mark the highest and the lowest. And there I was trying to give you some reasons why I marked the other area of the dotted line. There we had an imbalance whereby the liquidity sweep had to come downwards to collect that or to fill that gap there very clear. Then after filling up the gap, from there the market had to proceed upwards, targeting some traders. So they had to sweep some stop losses. Normally we call it the liquidity sweep. I don't know whether I'm very clear about that. So I went on downwards to give you a certain image on especially those guys that are trading SMs and ICT. You know this thing that we talk about, the two types of liquidity, the sell side liquidity and the buy side liquidity. So it is the same thing that you're experiencing on the weekly time frame, on the monthly time frame. So there I had to draw you guys a support and a resistance line. Then I had to give you the actual movement of the market, and that's the same thing that we're having there in our real chart. So we had to mark the highs and the lows. Then after that, the market had to break off or to give us a break of market structure. And then normally after experiencing a break of market structure, we wait for a retest like that, then we proceed downwards. You understand? But unfortunately here, the market had to come back inside, giving us what we call the failed swing. Normally we call it failed breakout, not a false breakout, but a failed breakout, whereby normally they call it the trap. So that was the image. Then after showing you guys the image, we had to clear up the chart so that we proceed with the analysis. This analysis that we are doing, it is a weekly analysis that we are gonna trade throughout the week. and I remember we had to look at that analysis before we look at it. So then I went on into the same trend, then I had to find the areas of rejection, and at that moment there where I marked another dotted line downwards, there we're having the imbalance, indicating that the market, by all means, by all chances, we still have more chances of the market proceeding downwards to fill that gap. That's the clear image I can give there. So as you're seeing, I don't know, I am very sure everyone is observing, whenever you're doing analysis, you have to start with the higher time frame to the lower time frame, normally for you to get clear view of the market. For you to get a clear view of the market, normally it's very better for you as a trader who is trying to analyze normally a long-term setup. You have to analyze starting from the higher time frame, and one of the higher time frames, you're having a monthly time frame, will give you a good image or a clear view of the market. So from there we had to proceed to the lower time frame, and we were able to find out that all our areas that were marked on the higher time frame were respected on this weekly. So when you come from a monthly time frame, then you go downwards to the weekly time frame. So we are able to see that the market at that area received higher candles with high volatility. They were so volatile, you understand? The candles were so volatile. So after you observing that, then I had to give you another expected area. Take some cells, the market would give us a rejection area, so that indicating that the market is going to move to proceed upwards, little like now. Normally that one we call it a retracement. Then after that retracement, then we proceed to the down ends to fill the other gaps of imbalance downwards. Then we shall get our buy areas after filling the other imbalance downwards. So normally, don't forget that this is a higher time frame. Normally on higher time frames, those short moves you see on higher time frames, they are totally strong, and they are more stronger on the lower time frames. So as you have seen the arrow showing you guys that the market might give us a retracement of a pullback, it's going to be a pullback. However, those guys that are targeting lower time frames, it's going to be a strong move of buys, however much it is our pullback in the higher time frames. So you proceed to the lower time frame. Now we had to go to the daily. We had to go to the daily time frame, and here on the daily time frame, as we see the trend is selling, I had to be specific, most clear, and I say that you look at the last three, most of the time last 3 to 4 candles normally. Then after you identifying that, you have to mark the highest and the lowest of those last 4 to 3 last candles of the daily chart. So after marking them, it will give you an opportunity for you to make a good trade in it. You have to wait for the coming candle. The next candle that will come, it will determine whether you go in for buys or you go in for sales. Hope I'm very clear. So that's what I was doing there. I had to mark the highest on that last candle, and I had to mark the lowest, and whereby the lowest was already marked. So it means that the candle that he will receive tomorrow morning, it will either pass through the highest of the last candle or go through the lowest of the last candle. So there I remember I had to tell traders that we had to proceed from there.